Hi, and welcome back to my channel where we talk about potentially interesting investment opportunities by looking at companies that are publicly traded and by looking at their numbers. And this week we will talk about a company that just reported earnings, which is in a unique position because it is actually a monopoly. Something we don't see too often anymore in the global economy, but this one is, all parties agree, actually is a monopoly. So by looking at the background behind me, you can already tell we're going to talk about ASML. So they reported earnings this week, and ASML, as you probably know, is a chip manufacturer. So they actually don't manufacture the chips. They're part of the overall semiconductor chip supply chain, and they're from Europe, from the Netherlands, from Eindhoven and Veldhoven in the Netherlands. And yeah, as I said, they're very integrated into this global chip supply chain. As you can see here, a broad overview over this global supply chain. So we have a couple of big players that you probably all know very well. So big one, NVIDIA. Everybody that has any interest in investing, is familiar with NVIDIA. And NVIDIA in the US, of course, is a chip designer, or for example, AMD. And what they do, they design the chips, and then the chips actually get produced in TSMC in Taiwan. But the machines to produce these chips actually come from ASML from Europe. So maybe this chart here shows it a little bit better. You have the fabless designer, for example, AMD or NVIDIA. Fabless just means fabricationless, so they don't have their own chip manufacturing facilities or fabrications. They just design it. Companies like TSMC, or mainly TSMC, create the chips, and they use it by using equipment from ASML, and of course other equipment is involved. But maybe to have a look at it and understand it a little bit better, because I'm not an expert on semiconductor manufacturing. I'm interested in the company's profile and numbers, but maybe we're gonna take a short look at this video from CNBC, which I can highly recommend, where they complain a little bit what is ASML and what makes their position in the marketplace so unique. So let's take a look here.
At the center of this big factory in the Netherlands, in the midst of a months-long assembly process, there's a revolutionary machine that the whole world has come to rely on.
You could see an EUV machine right behind me.
The size of a city bus, but working with atomic-level precision, these EUV lithography machines are the most expensive step in making every advanced microchip that powers the modern digital age: data centers, cars, and every single iPhone.
We are the only provider on the planet of this critical technology.
These machines are the only way to print minuscule designs on these chips. They cost up to $200 million, and they're only made by a single company: Advanced Semiconductor Materials Lithography, or ASML.
Today, ASML has a monopoly on the fabrication of EUV lithography machines, the most advanced type of lithography equipment that's needed to make every single advanced processor chip that we use today.
Just a very brief explanation by that video, but very good. I can recommend the entire video. When have you ever heard experts on a company, or even a representative of a company, say so openly the company has a monopoly? Like, I think we all knew from the news that especially in Europe, there are always these antitrust regulation inquiries into big tech companies. But I mean, big tech companies, they have very strong market positions, and they have probably some kind of monopoly type situation. Like, you could argue that, for example, Google had a very strong position in search engine, a quasi monopoly. But to be fair, we've seen it now with the generative AI chat applications. Yeah, this Google's monopoly is faltering, and there were always other search engines you could use. You could use For example, DuckDuckGo if you want search that is more private, or you could use, back in the day, of course, you had Yahoo, or you had always Microsoft Bing. So you'd always, it was not 100% monopoly. Here we have a true monopoly. So this company is really, if they would disappear from today, nobody could do it. If Google would disappear today, people would start using other search engines immediately. So this is a true monopoly. And also because there's so much know-how required and so expensive to produce these machines. And now with this information that we're talking about a true monopoly, we could expect like, wow, okay, this company must have a crazy valuation. It must be priced with a 100x PE ratio because it has such a strong position in the marketplace. Let's take a look at the actual stock price, and we will see, okay, wow, what we've just heard doesn't really reflect that. So we see a stock price which is continuously going down for the last year. And if we look at the evaluations, like we have a PE ratio under 30 for a company that is high tech with a monopoly. So pretty staggering for me. And for me, this constitutes a potentially very interesting opportunity. As always, of course, make your own research, do your own research, look into the numbers yourself. Don't take the numbers that you see here by face value. And as I said, I'm not an expert on the actual process of chip manufacturing. For me, it's just interesting to look at these dynamics and look at this profile of the company, and then look at the valuation. And just looking at that, for me, this looks like an opportunity. I mean, of course, we had the price peaked when we had peak AI craze. So when really everybody was super hyped about generative AI and NVIDIA. That was also, of course, when ASML was at its peak. But we will take a look now into the numbers and see, if they're really so much depending on hype, and if this downward trajectory may be unwarranted. So, as I said, they just reported quarterly results this week. Just 7.7 in net sales, gross margin of 54%. So that's a very, very good margin. And R&D costs, they're spending in R&D and earnings per share. Let's go first into the press release. Oh, where are you, press release? Here's the press release. Let's the highlights that we've just seen, and let's look a little bit at what the leadership of the company has to say. That's what I'm interested before we actually go into the numbers. So they say that net sales came in at 7.7 billion, in line with guidance, so that's good. Gross margin increased to 54%. That's terrific. And then they explain a little bit about their product mix. So they have the EUV products. And the way I understand it, they started shipping this new high-tech, high-NA system. So which will, it's just new high-tech. As I said, don't ask me to explain that one to you. But it's always good for me to see, and a company is starting to successfully roll out new products as well and new product lines. So looking at that, they're saying that customers still expect so in conversations with the customers, they still expect 2025 and 2026 to be growth years. So they expect, they publicly put it out there, they expect continued growth. But of course, now we come to what could be potentially causing this downtrend. We come to the tariff announcements and the macro environment. So, and of course, they mentioned that the artificial intelligence boom, which though he says that they're expecting this to continue. So a couple of important points here. So Yeah, it's tariffs. Everybody's talking about tariffs. For example, ASML, I think, is not allowed to ship those machines to China. They cannot sell their machines to China anymore, which of course would increase their revenue. But it could also be, in my opinion, an opportunity, because maybe the US wants to do more reshoring, and then they can start to sell more of their machines to the US, to be honest. And yeah, as I said before, AI boom. Yeah, we could of course see a little bit of a slow in the AI boom, or we've already seen it. But I don't think chip manufacturing will decrease significantly in the coming years. So, I mean, we've seen it briefly in the video. Chips are in everything. Chips are in Teslas. Chips are in computers. They are in fridges. They are in everything that's coming out today. Of course, they're also in the AI data centers, but they're in everything. So don't expect chip manufacturing to slow down anytime soon. And yeah, so they explain themselves what could be the cautioning reasons here. But we will actually look at the numbers to see if that is some reasonable threats here. So let's look at the quarterly results that they reported in the financial statement. And yeah, let's start at the top. Year over year, for the first quarter compared to the first quarter of last year, we see the sales increased, the revenue increased to 7.7 billion. So that's a 45% increase in revenue. So pretty nice right there. And what I really like is we see this increase in services revenue. So increased from 1.3 billion to 2 billion. And I think that's a 54% increase year over year. And that is I really like to see that. So think about selling these very, very expensive machines. How can you really make money? You sell services related to that. So data analytics, consulting, training, software development. If you manage to pair this with services that have way lower input costs, you really have the potential to scale here and yeah, to greatly increase your revenue. So I really like to see that increase here. Total cost of sales increased pretty much. That is not good, of course, but gross profit increased to 4.1 billion. So that's pretty good. Yeah, what are we looking at next? So yeah, we see net income increased, revenue, net income, really strong performance. So we really like this. And then what we said before, margins increased 54%. So that is amazing for an engineering company to have this kind of margins, very strong margins. We very like this, but yeah, that's what you would expect to see from a monopoly. And but I think they're doing well. Like, they're not exploiting their monopolistic position. I think they're really working with the customers, while of course making very good profits. And really important number here for I think maybe one of the most important numbers here, ASML. So the thing about ASML, it's not like I don't know, your average company that yeah, they have a product on the counter and that product is available for sale. Instead, they have these bookings and backlogs, and they actually have huge backlogs of bookings, and of 3.9 billion in bookings. So especially here, we see that increase from year over year. So that's pretty good to see. Like, if I would, when I see a decreasing stock price, I would expect at least either the revenue to go down or at least the bookings to go down. But I mean, year over year, both the bookings and the revenue are going up, so that's pretty good. And yeah, so I think that's important to keep an eye on. And maybe now we've looked at the revenue and the bookings, it's important, I think, to look at the liabilities, because maybe sometimes we see, oh, companies increasing revenue, maybe they bought this revenue, maybe they paid. Look at the liabilities if the debt is increasing. And we actually see total current liabilities increase to 18 billion. And total non-current liabilities also decreased to 9 billion from 10 billion. So the total liabilities decreased from 30 billion to 27.9 billion. Pretty good. I mean, they decreased the debt in an environment where interest rates were higher. They're coming down now. So maybe now when interest rates, especially in Europe, are coming down, it's not so bad anymore. But it's definitely always a good sign if a company is decreasing their liabilities, even though they're still rolling out new high-tech equipment like we've discussed before. And cash flow also an increase from 1.2 to 3.3 billion. So all of this is very, very good, very, very good. Let's look into this. Let's look at all the quarters. Before we compared it from year over year, let's look at the numbers compared quarter to quarter. And here we see a little bit of a different picture. So we see the net sales coming down compared to the last quarter. But of course, compared to year over year, we see a big increase. And I still think that year over year is the most important thing to look at. But yeah, I mean, that gives you at least a little bit of an indication that, it's not all going to the moon. It's not all skyrocketing. But yeah, shipping this big equipment is a very seasonal business. And what matters is the overall year over year performance. It's not so much what happened this week or next week. What happens in... we as long as we see the year-over-year income, revenues, profits, margins increasing without debt skyrocketing, it doesn't matter if quarter to quarter we see a slight decrease, in my opinion. We looked at the numbers. We saw that the revenue is increasing well year over year. And now it's up to you to make your own mind, make your own picture. In my opinion, could be an interesting opportunity. We discussed a little bit about the reasons. So, of course, what everybody's talking about, tariffs, the overall economic picture, and maybe the end of the AI craze boom are potential threats to this company. But looking at the stock price, I mean, that seems priced into me. And I want to remind, we're talking about a monopoly. This is a monopolistic company that, in theory, could dictate prices. So they're in a very, very strong market position. And in my opinion, a PE of 29 for a company with increasing revenues, with a good order book, with innovations coming out of the pipeline. It just looks pretty attractive to me. And thank you for your attention. Now, of course, it's up to you to make your own picture, make up your own mind. And let me know what you think. See you next time.